Good day, VB Nation, and welcome to the VectorVest International User Group Forum. We're already in March, folks. It's Saturday, March 7th, 2026. As usual, this webinar is broadcast live on the VectorVest YouTube channel. So as you can see on the screen, please make sure your computer speakers are turned on to hear the audio portions of this webinar, and the recording will be archived on the VectorVest YouTube channel and available shortly after the webinar is done. All right, so welcome and thank you all for sharing part of your weekend with us. We're going to have a lot to run through as always. So let me go and get the disclaimer up. So as everybody knows, there is risk in investing. So everything you will see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, and let's take a look and see who we have. I know right off the start, I saw Vancouver in the house. There's Brian in Vancouver. We've got Fred and Barry. Let's see, run through some quick, and let's just see. Vancouver Island's in the house there too. There's Guelph, Ontario. So far, everything in Canada. There's Pembina, North Dakota. So we've got Badger from North Dakota. There is Naples in the house, so Naples, Florida. There's Tom from Burlington, Gil from Montreal, Raphael from Calgary. There we go. There's Eric from Belgium. We've got Bob from out in New Brunswick. We've got Tabula from Dubai. Once again, showing the international flavor that we have here. Hey, Bill, good to see you. Bill up in Minnesota in the U.S. And Marguerite from Oakville. So people still coming in. As I mentioned, we do have a lot to run through. So sorry if I missed you, but we will advance the slides. There you have it, the agenda for today, folks. Again, my pleasure to be able to host this event. And we'll be covering the global market review. Of course, we've had a lot going on in the markets, haven't we? Geopolitical events all over the place. Hopefully, everybody is staying safe and healthy wherever they're at. But we'll do our global market review. And then I will be joined by none other than straight from Tampa, Ms. Susan Hayes Culleton, Managing Director of VectorVest Europe, for her keynote presentation, Navigating Earnings Season with VectorVest. Now, I know that Susan loves when I say this, but we're almost at the end of the current earnings season, and we'll be rolling right into the next one, and we'll see some information on that as we go. Susan's take, earnings season never ends. All right, so we'll be covering all of that before adjourning somewhere around 12:30. As I mentioned earlier, the replay will be available on the VectorVest YouTube channel after the webinar. All right, so without further ado, let's get rolling here. Let's get to the global market review. And here you go. Here's how everything has shaped up across the VectorVest world. So you can see February. Basically, Canada out in front there with a 3.53% gain for the month of February, followed by the US at 1.58%. The European Union came in at 1.38%. You can see Australia down 0.97%. And there you can see the year-to-date numbers as well. So you can see a lot of the gains that we were seeing earlier in the year and through February kind of got snuffed out in the beginning of March. All right, so you can see Canada year-to-date 0.91%, the US at 1.14%, Australia down 1.75% year-to-date so far, and the European Union could be considered legally intoxicated at 0.08%. All right, so there you have it. Here's Canada's color guard. So we'll be seeing quite similar things once again here, folks. We can see as of the close on Friday, market timing gauge needle in Canada, 3 ticks into the red, and guidance very clearly states the color guard is bearish. VectorVest does not advocate buying any stocks at this time. You can see from the image of the color guard, we have transitioned from a lot of green lights. Back in this period here, we were actually able to put in an RT Kicker confirmed green light. You can see the earlier ones weren't. Right there on the 2nd of March, right before things started deteriorating for the rest of the past week. We would have seen a lot more red lights in the price column, but you can see some of those green lights stop that from happening. All right, so Canada now at a point where all of our proprietary market timing indicators operating below the level of 1. You can see RT just dropped below 1 at 0.99 on Friday. The BSR has degraded significantly from a high of 1.56 on the 26th of Feb to 0.51, telling us we're looking at unhealthy market conditions. Sell-rated stocks outpacing buy-rated stocks pretty much 2 to 1. And then you can see the MTI, which had got into lofty, toppy levels for the Canadian market. Looks like the high was on the 26th of Feb at 1.34, dropped all the way down, and Friday came down below 1 from 1.03 to 0.94, changing Canada into a down situation. So you can see the second portion of our trend column here had been reading up right up until Friday. That changed from above 1 to below 1 with the MTI, telling us now that the underlying trend of the market is down. So we're now in a short-term downtrend in an underlying downtrend. You can see the confirmed call remains up in the Canadian market. All right, here's a summary. Well, there's the year-to-date 0.91% for the Canadian VectorVest composite. And here's a summary of the market timing signals, our proprietary market timing signals in the Canadian market. You can see those confirmed calls remain up since the 2nd of December. The DAW turned down on the 6th of March, the green light buyer, neutral since the 3rd of March, and the primary wave turned back down on the 3rd of March. Here's the US picture. All right, so looking at the color guard there, you can see the US came from a mix of green and red, telling you how the markets have been going back and forth. Eventually, the transition to more yellows and reds, and a couple sessions of 3 red lights across the board. Market timing gauge needle, 3 ticks into the red there as well, and the same guidance as in Canada. The color guard is bearish. VectorVest does not advocate buying any stocks at this time. All right, we can also see, so on the US side, we weren't seeing the indicators get to the levels we did see in the Canadian market. However, you can see they have degraded significantly. So on the 26th of Feb, as well as when we saw some of the high marks here, RT at 0.97, the BSR at 1.02, and the MTI at 1.15. And you can see the levels that we're dealing with now, RT at 0.87, the BSR all the way down to 0.36, not at bottoming levels yet. Those will, that's 0.20 and below for the BSR, but getting fairly close at 0.36. Of course, we don't want to front run that. We'll wait and see how the market plays out. And there you can see the MTI that came down from about 1.15 high mark there to 0.79. The US also in a down situation. All right, and if we run through, we'll show the 1.14% year-to-date return, and then here's a summary of the market timing signals for the US. You can see the confirmed calls down since the 5th of February. The DAW turned down on the 3rd of March. The green light buyer turned neutral on the 26th of February, and the primary wave turned back down on the 3rd of March. Australia up next. Australia, you can see market timing gauge needle 2 ticks into the red. Guidance that reads the color guard is somewhat bearish. VectorVest does not advocate buying any stocks at this time. And there you can see levels we're looking at for Australia. Now you can see they've been in a bit of a downtrend for a little bit longer here. And we're looking at a BSR already at 0.21 in the Australian mark. So right in that range of bottoming levels with the BSR. The MTI sitting at 0.82, so it hasn't quite gotten to 0.60, which would be the bottoming levels for the MTI at this point. All right, but the BSR pretty much right on the fringe. You can see Australia in a down situation as well. However, their confirmed call still up at this point, and you can see just in the 2.5 week trading length of time here that they did end up getting the confirmed call turn back up on the 27th of February. All right, here's the year to date, the minus 1.75% return on the Australian VectorVest composite. And here's a summary of the market timing signals. You can see those confirmed calls did turn back up on the 27th of February. The DW down since the 2nd of February. The green light buyer neutral since the 2nd of March. And the primary wave had turned back down on the 4th of March. So once again, with the markets bouncing back and forth, you can see some weird situations set up here with the market timing signals as well. All right, next, that brings us to the European Union. All right, there you can see, so kind of matching market timing gauge setups here, the market timing gauge needle in the European Union, 2 ticks into the red. Guidance that reads the color guard is somewhat bearish. VectorVest does not advocate buying any stocks at this time. And here we can see how things have kind of played out. And we know that in the European Union, they got to very lofty levels, especially in the BSR column. You can see back on the 20th of February, they were at 2.83. This was a day where they were able to put 3 green lights together. Looks like close to the high mark there. It is the high mark as far as the BSR goes. The MTI did get a little bit higher on the 25th of February, but from 2.83 all the way down to 0.53 for the BSR now. And you can see all of our proprietary indicators operating below the value of 1 in the European Union as well. The RT at 0.97, the BSR at 0.53, as I stated, and the MTI dropping from 1 to 0.94 on Friday. So important there too, that the underlying trend has now switched to down as of Friday. So they're in a down situation. A confirmed call remains up there. There's the 0.08 in the European Union, and there's a summary of the market timing signals. You can see the confirmed calls have been up since the 3rd of December. The DW turned down on the 3rd of March. The green light buyer has been in neutral position since the 2nd of March, and the primary wave turned back down on the 2nd of March. All right, so that's the color guards across the VectorVest world. Here's a snapshot of the market timing graphs. You can see Canada here. So we can see how even though we've had, it might seem like the markets have dropped quite a bit more than they have. You can see we're not too far off the highs. However, this latest pullback, we already have pulled back past some levels of support that we've already identified. All right, the Canadian market on Friday had already gone through one level that you can see with the red dotted or the orange dotted line there, and our resting on another level right there. So I've got support, closest level of support at about 37.34 for the Canadian market. Another level of support just below that at 36.93. That'll be this zone here. All right, and then we have resistance at 37.68. What was support now becomes resistance. And then previous swing high resistance would come in at around 38.39. All right, but overall, we can see, as we saw in the color guard, all of our proprietary market timing indicators now operating below the value of 1 in the Canadian market. Here's the US market picture. So they have dropped a bit further than what we saw in the Canadian market. And so you can see as of Friday, look like just breaking down through critical level of support right here. We'll be looking to see whether we get follow through and confirmation of that when the markets open back up on Monday. But they did come back down to another level here that we identified. That's where they bounced off of intraday Friday and looked for support. So in the US market, we have close support at 77.24, another level down at 74.89, and then we've got resistance at 78.25, and then the higher level at 79.20. Here's Australia. So there you can see the Australian picture operating below. So they've been operating below the 65-day moving average since back in February, January-February timeframe. And you can see they've already tested this level of support down here a few times. We're able to bounce off it there. Came right back up, retested resistance at the 65-day, looked like they were going to break through, but broke down again. And as of last week and Friday, have been retesting support. So we've got support there at 443 and lower support at 404. There is a level at 433 in between those two. And then we have resistance at 457. Right in around the 65-day moving average, and a higher level of resistance at 474. Here's the European Union. All right, and we can see the European Union flirting with breaking down and confirming that breakdown below the 65-day and a level of support. That's exactly the zone that they ended up in on Friday. All right, so we'll have to see on Monday if that's able to hold, if you're able to bounce from there, possibly take a run back up at previous swing high resistance. If not, we've got support at 107.96, another level down at 103.35, and then we've got resistance at 109.26, and then the higher level at 112.75 for the European Union. All right, so that is a quick run through the market timing. So the color guards, the market timing graphs, that brings us into the global market tracking ETFs. These are the ETFs found in the US software. Folks, we've got a rundown here, January, what we covered last time, and how it was looking for February. So you can see February, January was actually pretty good. Out of the 43 ETFs, 42 winners, 1 loser. You can see not quite as good, but still pretty decent for February. 34 winners, 9 losers. As a basket, 3.30% gain. And you can see, so they did outperform the VectorVest composite, which was in at 1.58% for February. All right, and with the side-by-side, you can see some of the players that have come back in. And, you know, when we start seeing some of the countries coming back in, we start possibly asking whether we're getting more signs of late market cycle activity here. We've seen the run up in commodities, and typically, the commodity rich markets are the ones you'll see running in late market cycles as well. And you can see that who wasn't in the list in January, we do have Australia, who was able to get in the top 5 here, and Canada as well, that came in number 9. You'll see some of the other players that came in, but not too bad returns when you look at the top 5 for sure. South Korea, South Africa, Taiwan, Australia, and Peru rounding out the top 5, anywhere from 23.66 to 8.36%. And then you've got Japan, Mexico, Philippines, Canada, and Asia Pacific ex-Japan rounding out the top 10. All right. So on the next slide, I changed things up a bit. Usually it was looking at February and year to date. I thought it would be better if we looked at what year to date looked like last month compared to now, just so we could see, who was moving a little bit quicker in the last month. So you can check out both lists there and see some of the countries that weren't in there back in January, but made it in February. Israel, for example, you could see they just missed making the top 10 in January, up to 3rd year to date so far. All right, so here we have South Korea, Peru, Israel, Brazil, and Taiwan rounding out the top 5, anywhere from a 3.35% return to a 9.43% return. And then Hong Kong, Australia, Turkey, Asia Pacific ex-Japan, and Mexico rounding out the top 10. As a basket, we had 2.74% return year to date against the 1.14% return for the VectorVest composite. All right. Now that moves us to the market sector ETFs. These in the US software as well. If you look in the cherry picking folder in the watch list viewer, that's where you'll find them. So last month, you can see who we had in the top 10. Now we have seen, so we were seeing oil, petroleum running probably since back in December, late November, December. It really started and then picked up. And then, of course, with the most recent geopolitical events, we've seen oil kind of moving up almost exponentially. So you could see now not just oil services, but oil, gas, exploration, production, and energy select rounding out the top 3 year to date. We had seen a drop in gold the last time we met, and we've seen a lot of back and forth in precious metals, including gold, but you can see that gold was able to work back up the list and get back into the top 5. All right, so as a basket of 30, we've got 20 winners, 10 losers. That basket put in a return of 5.85% so far year to date in 2026 against the VVC at 1.14%. And some of the other players in there that you can see have come in, which also kind of, have us look into, are we more late market cycle here? You can see consumer staples has come in and made the list here. So we've got, 3 oil plays in the beginning. We've got North American Natural Resources and gold miners rounding out the top 5. And then we've got everything from telecom, consumer staples, materials, industrials, and utilities rounding out the top 10. All right, so that's the market sector ETF. So basically another change that I made here, instead of just doing the market sector ETFs 10-day delta, I thought it would be good to look at the global market ETF 10-day delta as well. So we've got both of them on this slide. That way, we can see who's moving in the last 10 days from a global market perspective and the sector perspective. Now, if you look at the last 10 days for the global market ETFs, you can see the only one on the plus side is Israel at 2.41%. Everybody else down in that list. All right. And if we look at the sectors, here you can see the sectors that have made the biggest moves, looking a bit better than the countryside. We can go down to 2, 4, 6, about the top 7 at least have positive returns there. And here you're seeing XOP at the top of that list with an 8.08% gain. Interestingly enough, I'll get it out. S&P Software and Services, they've been taking quite a big hit over the last while with concerns about the effect of AI on those. You can see the last 10 days, 4.6% gain with the XSW. There you can see XLE in there. There's Next Gen Media and utilities, so spotter utilities rounding out the top 5 there. All right, so that is that. That brings us to the upcoming, well, first we'll cover February. We closed out February. A bit of a mix in what happened. Reserve Bank of Australia kicked things off, and they were a bit of an outlier. They increased interest rates 0.25%. All right, then we had Bank of England and the European Union Central Bank both hold. And those were the main ones we were concerned about. You can see the other players in there as well. So now let's take a look at what we've got coming up in March. So we're going to go once again for the main ones that we're interested in. Australia is going to be first up on Monday, March 16th. So the Reserve Bank of Australia will have their interest rate decision there. So far, a hold is forecast. All right, and then we'll have to fast forward. So most of it happening that week, most of what we're going to be interested in looking at, you can see Wednesday, March 18th, Bank of Canada interest rate decision, the US Fed, these times that will be 2 o'clock. The press conference will be 2:30. I'm not sure why this site always gets those times wrong early, but you can see so far still a hold anticipated for the US Fed. And then the following day, Thursday, March 19th, we've got the Bank of England, the European Union coming out with their interest rate decisions. Oh, I did miss Japan on the same day as Canada and the US on the 18th. So another key one to keep an eye on here. All right, so that's the central bank rate announcements that might end up affecting markets one way or another. We could probably have a really interesting conversation about all of that, but you know, some of what I'm hearing is the tough spot that they say the central banks are now in, with oil starting to shoot up in price. And, you know, especially in the US, well, everybody looking for cuts in interest rates, where the central banks might have to actually do the opposite. So keep an eye out for that. All right. Here is a summary of the weekly essays from around the VectorVest world. Another excellent week of essays, folks. The hits just keep on coming. Out of the US, Angela Akers wrote one, Rules for a Reason. That was the title. How to use VectorVest to test your own and/or existing trading systems and the importance of following your rules. In Canada, Don Reitzma wrote one entitled VectorVest Aggressive Trading Systems, Normalizing Returns. So how to use VectorVest to start a preliminary analysis of the aggressive trading systems and compare the returns. There's going to be a part 2 to that one. The European Union, Susan Hayes Culleton, who happens to be with us, wrote one about her favorite game, the birthday game. So how to use VectorVest to prove how high relative safety stocks are able to outperform the overall market consistently over the years. And then from the land down under, Robert and Russell Markham in Australia wrote one entitled Oil and Gas to Keep Rising with US-Iran Conflict. How to use VectorVest to find oil and gas stocks that could benefit from current geopolitical events and compare that industry's performance to others. And in this case, they compared the oil and gas sector to gold. All right. So as I said, another great week of essays. Folks, I know it's early in the weekend. If you haven't had a chance to see or read all of these, if you do see something that interests you, just know that you can log into the VectorVest 7 software into any of those countries by choosing their flag at the login screen and then logging in as you normally would. Then navigate to the Views tab and the Views last Friday. And you can also get to them through the mobile app as well by choosing the different countries in the mobile app. All right, so that brings us to the March almanac. So after a 3.33% gain in January and a 1.2% gain in February, what are the odds for March? Well, March is coming in like a lion, is it not? We'll have to see if coming in like a lion is going to equate to going out like a lamb when we get to uh, the end of the month. So historically, according to Hirsch and Mistel Stock Traders Almanac, March experiences late month choppiness due to end of quarter selling. Nevertheless, over the last 30 years, the price of the VectorVest composite has managed to rise 17 times with an average gain of 2.55% and fall 13 times with an average loss of 3.47%. So we've got a 57% chance of a winning March. All right, so the odds of winning only slightly outpace the odds of losing, and not just economic headwinds, but we know we're facing some geopolitical ones as well. All right, so but Angie smartly states that, as always, we won't predict the market. We will follow it and see where it leads for the March Almanac. All right, and here is the earnings update. I did state that we're winding down Q4 2025 earnings season. So we've already got an estimate 2026 earnings season, and you can see FactSet is reporting estimates of 11.5% earnings growth for Q1 2026. Whoop, went back the wrong way. If 11.5% is the actual growth rate, it will mark the 6th straight quarter of double-digit growth. All right, so we will see as we do get into a new earnings season how that one shapes out, but I think those estimates outpace what they were expecting in the last earnings season by a bit. All right, so that brings us into trade ideas. Let me just do a check on time here. Now we have had quite a significant move in commodities. So we are going to look at commodities. I'm going to bring the US software up here, and we're going to look at ETFs. The ETFs we use to track commodities in the US market. So you can see, I guess since our last meeting, folks, we had a pretty good pullback in some of the commodities, or right in around that time at least. Now here you can see GLD tracking physical gold for the U.S. markets, and we've got the near perfect indicator, the NPI graph layout on. All right, showing us a couple moving averages that define trend in the top, and a couple moving averages in the bottom graph that define a trigger for us. All right, And we can see with GLD from an NPI perspective, at this point, we still have both trigger and trend. Mind you, in the most recent pullback, you can see the 5 moving average of RT has turned down fairly sharply and is heading back towards the 40. So if the 5 moving average of RT does cross below the 40, we will lose trigger, but you can see trend still intact here. After the pullback here, from a technical perspective, gold was expected to be able to rebound and retest previous swing high right up here. You could see so far it got close to that, not quite in the realm as far as GLD goes, at least. And we can see that GLD has pulled right back to an area of support we've been keeping an eye on. That level, if I go into 6 months here, is 463.88, that support zone. All right, and you can see that it tested it multiple times through the week. We ended up with an open green candle on Friday. So if GLD and of course the underlying gold can find support here and bounce, we'll see if we can take out this most previous swing high here before taking a run at 510.45. All right. So that support level, if it does break down, we do have another level of support down here at 427.07. All right, so that's the picture on GLD or gold. If we look at the gold miners, um, from an NPI perspective, you can see here's an example where the 5 moving average of RT has crossed below the 40. So trigger has been lost, and that was an aggressive pullback. So folks, one of the things we're seeing here is a divergence that I always keep an eye on. Divergence between the underlying and the gold miners, and we've seen a lot of it in the run up of gold over the last couple years, but I think it got even more significant in this past week. We've seen volatility pick up overall, so something to keep an eye on. If you do see gold having a good day and the miners not taking part or actually down, it is something to pay attention to. So with GDX, if I zoom into 6 months here, so I did mention no trigger. We do have trend, and you can see that GDX. So I mentioned that gold was supposed to be able to get back up to previous swing high. We'll see if it does overall, but you can see the miners did. So the miners were able to get just above there. And, we even had a bit of a follow through day there that ended up breaking down. So a fake out breakout. And then you could see the big gap down before coming down and testing support here at 97.92. All right, you can see an open red candle on Friday. So we'll have to see if that support level will hold before, if it can, and gold or GDX can bounce from here, see whether it can take another run at 113.55. If it does break down, you've got another level of support down here around 88.42. All right, so that's GDX for the gold miners. Here's SLV for silver. So from a technical perspective, silver wasn't expected to be able to re-rally and into the high level that it achieved back here. All right, it was only expected to be able to get into the $90 range, which is about what it did. All right, from an NPI perspective, no trigger. You can see that broke down back here. Still have trend in play. All right, and at the 6 month level here, so you can see when silver did end up finding support at 65.52, it was able to rally right through resistance at 73.80, but ended up meeting resistance right around here at 84.74, couldn't get through there, and now has been basically for the last 4 sessions just kind of consolidating along support at 73.80, that overall support zone, deciding which way it's going to move from there. All right, so that'll be an important level. If that doesn't hold, we'll have to see if the retested level back here at 65.52 would be able to hold for SLV. Here's XLE. So we mentioned petroleum has been running. There you can see you do have trigger, you do have trend, and oil ran up. So XLE in this case ran up to a high 5 sessions ago. All right, so that's resistance right now, 57.88. There is some support that's already been tested when it consolidated in through this area here at around 55.37. That overall zone, you can see that was retested there. And in the last couple days, XLE has tried to run back up against resistance here. All right, so we'll have to see how that one plays out, if it can break above and get confirmation, see if it can keep running. Now, unfortunately, if oil keeps going up, it's not going to be good for the rest of us. But we'll see how that one plays out. One thing that I want to kind of warn about with oil, and I'll take XLE back to, I'm just going to drag my timeline back so I can see 2022. And if everybody knows the geopolitical event that happened in 2022, so I'm going to go right back into this time, and maybe what I'll do here is I'll just zoom in to the start of the run-up. All right, so the run-up started back here, and then we ended up having the geopolitical event that sent oil prices up. And typically what you'll see with oil prices is they will run up, and you will end up getting a significant pullback. All right, and that's, you know, whether the event continues to happen or not. So keep an eye out for that. Don't be afraid to take gains off the table when it comes to the oil petroleum sector. There's always going to be a re-entry point in any commodities, but oil has a really bad habit of spiking, you know, as soon as a geopolitical event happens, and then pulling back sharply. All right, so keep that in mind. So that's XLE. What are we looking at? All right, so here is CPR for copper. So you can see from an NPI perspective, no trigger, trend has been maintained. And you can see copper for the most part has been kind of range bound. We've got a bit of a wider channel here, 34.38 to 36.65. But we've also got a bit of a narrower one here, 35.70-ish. It's just on the other side of that, has just kind of retesting this as support. Put in a green day. Let me go to 6 months here. Put in a green day on Friday, but still operating below the absolute line, but within that zone. All right, so we'll have to see if that's going to be able to hold. There was this, you know, real outlier candle on that day, but we'll have to see if this will be able to hold, and see if CPR copper can take another run here. It'll have to take out 36.66. If it does break down further, you have another support level at 34.42. Here's Euro for uranium. So uranium, no trigger, still have trend, but watch that 5 moving average of stop is angled back down, heading towards the 40 on this most recent pullback. And here's the year look. Here's the 6 month look. And we can see that I'll even go to 3 months here on this one, so we can see the candle here from Friday. So Thursday's candle testing support at 50.62. And right now, Friday's candle actually confirming breakdown there. Now we did end up with a doji, all right, and most likely this candle did retest the overall zone of support down at 47.53. So keep an eye on that level, see if it can hold. If it does move up from here, 50.62 was support, will be resistance before it can take a run at, say, 56.55 here, and then the higher levels of resistance. All right, that's uranium. Here's lithium. Let's go to the 1-year look first. So no trigger. You still have trend on that most recent run up. The 52-week high not too far behind you here. Let's go to 6 months. So you can see that lithium has pulled back. All commodities have been pulling back. They're sitting right now at a key support level of 67.96. All right, so that's been retested multiple times this past week as well, including Friday. They continue to operate, or price action continues to operate above that line. So see if that can hold. If it doesn't hold, there's another level of support right down here at 63.74. If it does hold and bounce, see if it can take out previous swing high resistance at 75.89. All right, so that is a run through commodities there. That brings us, folks, to me bringing in and introducing, I'm sure she doesn't need introductions for most folks, but Miss Susan Hayes Culleton, Managing Director of VectorVest Europe, and her keynote presentation, Navigating Earnings Season with VectorVest. Take it away, Susan.
Thank you very much indeed, Rick, and hello to you all. It is super to be here with you. I have been checking in here on the chat, and thank you for some of you who've been saying some lovely things there, and also for commenting on my contribution during Tampa. What you don't know is that Rick was there for every single presentation, every single one, and he was managing the mouse. So he had the toughest job of us all. So I was up on stage quite a bit, as you know, any of you who joined online. I was up and down introducing everybody, and I was summarizing everybody during the lunch breaks. I was talking through various different interactive elements with the online audience. I was leading the special presentation. So I was up and down quite a lot. Believe me, Rick was the man behind the scenes all the time. He had the toughest job of us all. Okay, so I'm after seeing there where you're joining us from. I can see that you're joining us from all over the world. So good morning to those of you who are joining us from anywhere around North or South America. Good afternoon if you're like me here in Europe, and good evening if you're joining us anywhere from Asia or Australia. You're all very, very welcome indeed. Now, here's what I'm going to do. I am first of all going to share my screen, and I'm going to take you through the stock that I picked for this earnings call. So let me do that now first. Okay, here we go. Great. Now, so what you should be able to see now, and is not, oh, it's gone over there to my other screen. Okay, so what I want to do is I just want to pop over the VectorVest system to you. Do you know what's going to be easier now? Is if I stop sharing and I share the other screen, because it is just after freezing on me there. So I'm going to stop sharing and I'm going to start again. Right, let's go on to the other screen. And here we are. Yeah, great stuff. Now, what you can see now is the earnings viewer. And the earnings viewer is a tool that all of you have access to in VectorVest, to those of you, of course, who are VectorVest subscribers. If anybody wants to follow along with me, please do go ahead and take a trial right now. If I could ask a member of the team there, whether it's Clay or Rick, just to pop a link to the chat, a link to the trial into the chat, please do feel free that you can follow along with me. Those of you who are VectorVest subscribers, if you log in, you'll be able to follow exactly what I'm doing. So what I've done here is that I've gone to viewer up here, and then I've gone to events viewer. And over here on the right hand side, you'll see that I have an earnings. Thank you very much indeed. I see that we now have the link to the trial there is in the chat. So thank you very much to the team member who did that. So as I say, I've gone from viewer to events viewer, and then over here on the right hand side is earnings. Now I amended here my calendar date, my search date, so that I would have it between Tuesday, because that's the day of the stocks earnings that I want to refer to today. If you look at yours right now and you haven't made any adjustments, it's going to look ahead. So it's going to look at the earnings from Monday. Okay, so I've already changed mine to reflect the screen that I have. So now you can see here and there was a lot of earnings. There was a lot of earnings out last week. Just as Rick said, we are right into the center now of earnings season. So I'm just going to scroll right down. Okay, I'm going to go all the way down here to the letter T. And when it comes to picking an earnings call to talk to you about, I usually choose one that is well known. When it comes to choosing one that I might be interested in, I would be running a unit search. I would be looking by a high VST. That's the way I would go. But for you, what I prefer to do is to pick a stock that's well known, so that then you're likely to be familiar with the company and the business. You may well have come across the stock. So that's my rationale for that. So on that note, I've picked Target. So this here, as you can see here, Target was out on Tuesday. This is the one that I'm going to go through. Let me just take a look here and see what you are now saying. An earnings that Fidelity has PAGS beating by 0.09, but then I can see that beating by penny. Okay, so I can see there, yeah, Michael Anthony is talking about what happened with Fidelity's earnings, just particularly in terms of expectations. Tabula says Rick rules. Yes, and he deserves to hear that. He's still here on my screen and he's working away there in the background, so I want to make sure that he has this as well. Then let me see, what are we on now? What do you want now? We're on standard moving to daylight savings time this weekend. So I see we're also having the chats about what time everybody is on. Okay, so that's Target. And now what I'm going to do is I'm going to go away from VectorVest for a moment. And I want to show you where I find the actual data of what I'm going to go through. Then I'm going to go back to the stock. I'm going to look at it from a VectorVest point of view, and then I'm going to analyze what came out in the earnings season itself. So when you look for earnings call transcripts, you can simply Google the term, the stock itself, and then earnings call transcript. Several companies, though, several organizations like Seeking Alpha, etc., you need to be a member, or you need to be logged in, or you need to have an account, sometimes a premium account, in order to see them. However, typically what I'll do is I'll do exactly what I'm showing you now, is that I go to the company's investor relations site. So I went here to investor relations, and then I clicked here on investors. Then I went down here to events and presentations. And then within here, I clicked downloadable transcript. Now it's different for every company. Sometimes they might just have earnings call or whatever, but that's the way in which I found it. And here it is, 36 pages long. I'm obviously going to give you a high level summary of that, and I'm going to show you what I personally look for, but that's how to get the earnings transcript. Can I just hear from people who are joining us live? Can I ask if any of you have been on an earnings call? Because you can also go on these live. I often do, where I will see when the earnings are coming out through the earnings viewer, and then I will go and I will actually attend the call live. So just want to check in there with anybody. Now, let me see here. As Cheryl said, Rick did a great job of keeping everybody informed on screen. And of course, she's referring to Tampa there. I had to laugh when Steve's new glasses still required him to seek aid to see what was on the projection. You were the man. Yeah, I was just in Steve's eye line, roundabout to the right at that point. So I know that indeed. So I see here a couple of you are saying yes. Cheryl is saying yes. Neil is saying yes. Bill is saying yes. Bart is saying once or twice. Now, for a while, I was on them every day. I used to be on them every day. And you, particularly as well, when you do them repeatedly, like we always have this joke between Rick and I. I've been on Lululemons now a few times, and I have reviewed them twice on this earnings call, or earnings call viewer, I was going to say, on this international forum. I do certainly look at others, plenty of others, but it's usually one that we talk about in the green room beforehand. I've certainly looked at many of the big tech firms as well. And when you look at them over time, you can start to see some trends there. Okay, now, before I get into look at the actual earnings call itself, I do want to talk to you about what VectorVest is saying, and specifically what it was saying on Monday before the earnings were out. So I'm now going to go back to my, I'm going to go back to Viewers Home, and particularly I want now to pick up on Stock Viewer. And in Stock Viewer, I am going to go in here and I'm going to look for target. Let's assume I don't know the ticker code, right? The ticker code is TGT. Let's assume I don't know that. I would simply type in the name of the stock. Okay, I see lots of you there have said yes. Even if you have never looked at an earnings call, I'll bring you right up to date. So I'm just going to type in, oh yeah. So there's just the system is updating there. Type in the name of the stock and then I typed that too fast. Okay, let me start again. And let me go more slowly this time. Yeah, you see it had it there now. T-A-R-G, you see there, as I'm typing it in, you can see target here appears at the top of the list. So now I can tell the ticker code is TGT, and let me go back, right? I want to go back now to Monday. I want to go back to Monday because on Monday, this was pre-earnings, so I want to take you through what the market was saying then. So on the 2nd of February, I'm going to run that, and now my stock viewer will update, and now it will tell me what VectorVest was saying about the stock on Monday. Okay, so what it was telling me was that the relative safety was at 0.86, which isn't great. Anything below 1 when it comes to relative safety it's unfavorable. That's what we say. Now, specifically, relative safety is a stock's predictability and consistency of earnings and dividends, but particularly earnings. And when I show you this earnings call, you will see why that was below 1, because several times the management team called this out. The price at the time was 113. Since then, it has jumped up to over 120 by the time we closed. And over here, then we see that the value at on the day was 92. The relative value was also uninspiring, you could say, at 0.87. That means, again, that the stock's long-term price appreciation potential pointed towards being unfavorable. The relative timing, though, the market was saying something different. The technicals were saying something different to the fundamentals. So the technical here was highlighting that the stock was rising. Anything above 1 is favorable, and relative timing is the direction, magnitude, and dynamics of the share price change. But particularly here, so VST was above 1, okay? Muted at 1.08, but it was above 1. The PE ratio at the time was quite an attractive if you were a defensive investor, or if you were a contrarian investor, or somebody who looks for value stocks. A PE ratio of 14.62 would be quite attractive. And of course, we would need to look at that in the context of the industry and the stock's history, but still a PE ratio of that level would be quite attractive for a value-based investor, not for a growth investor. That would be uninteresting to them. But to a value-based investor like me, that is attractive. So then we have a buy recommendation. So a buy recommendation means the stock's stock price is above the stock's stop price. And obviously I'm exaggerating there for effect. So that means that the price is trading above the stop. Secondly, that the RT is above 1, you can already see that. That the VST is above 1, you can already see that. And when I bring up the graph, you'll be able to see that the stock price was trending away from the stop price as well. So for all those reasons, the stock had a buy recommendation. Now, the stop price, of course, is at 103, which is quite a distance away from 113. So there was $10 there of a difference in between the two in order for it to have gotten a sell recommendation. Okay. Now, if I keep on going over, CI was quite weak at 0.47. That's the long stock's ability to withstand severe and or lengthy price decline. So we can see that really was quite, quite negative. Well, no, sorry, not negative. A CI can't be negative, but it certainly was weak. And then the growth rate of the stock was -6%. Again, you'll hear the management team calling out that and how they're seeking to turn that around. Earnings per share at the time was $7.74. And also because the earnings growth, since it was negative, the GPE here was also negative, which makes sense. If the growth divided by the PE ratio is the GPE, if growth is negative, the PE ratio was positive, then because let me just explain how that can happen. The PE ratio is the price divided by the earnings per share. The price can never be negative, but the earnings per share can. Now, Target was not losing money. It's not a loss-making company. It was just growing its earnings in a negative direction. So the earnings growth was negative, which meant that it was a decline in its earnings, but the earnings were still positive. As a result, then you can have GPE, which is negative, while you'd still have the PE ratio, which is positive. A little mathematical lesson there. Okay. Then we have the dividend yield of 4.03%, You know, which, I mean, in the current interest rate scenario would be quite healthy. Dividend safety being okay at 47. If the company is earning less, well, then, of course, then that always would suggest one needs to be concerned about the safety of the dividend. So at 47, that rate is in between 0 and 99. So that's just about halfway there. And then we can see the YSG there is at 1.13. Okay, so stock would have been, you know, in terms of appearing high on the let's just take a look at what the highest VST was. So the VST of target was 1.08. Let me just search now. It's going to clear that. And let's see what the top 10 VST stocks on Tuesday, where they were at. Yeah, I mean, you know, you would have been well off seeing target if you were looking for high VST stocks. So we go from 1.7 down to 1.61. So 1.08 is well lower than that. Now, as I say, the reason that I pick the stock that I pick for you to analyze for the earnings is simply based on what stock is well known, so that you can just build your familiarity with what the company is and what the earnings are, and then connect the two of those together. In previous international forums, I've shown you searches of where I've gone looking for earnings calls that I would be interested in my own right, and you can always go and check that out. So now let me jump across. I'm going to just open up the graph so that we have it open, but I want to go now to the earnings call itself. Right, so I just want to get TGT ready here. Just want to make sure that it's ready to go. Right, okay. Now I'm going to pop over now to the earnings call itself, right? And a couple of things I want to start off with you to tell you about before we get into the transcript. So Target is the 5th biggest digital grocer in the US. You all are likely to know who the number 1 is. And it has 2,000 stores located within 10 minutes of 75% of the population in the US. 2/3 of their digital sales are in service that is fulfilled within the day. So that is, as you'll see, something that they really lean into. 97% fulfillment happens in the store. So it's very much driven around its stores. The experience of the store, the efficiency of the store, the ability of the store to deliver within the day, etc. But the store, the physical element of the store is very, very important to them, while of course digital marketing, social media and its AI, all of those are very important as well, but they do put the focus on that. Now, I did tell you about RS, let me see here. Donald says Target hasn't broken through long-term resistance yet. Price is definitely in an area of congestion going back to late 2019. We're going to analyze the graph a little bit later on, Donald, but can I show you what management says, right, repeatedly? And this is why the RS was below 1, the RV was below 1, the CI was well below 1. Let me just scroll on down here now, and okay. Work starts here. Work with our founders. Work simply. That's everything that we do. Okay. Discipline. Discipline. Let me just search the word discipline. Yeah. There you go. This came from the Executive Vice President and Chief Merchandising Officer. She said, I will be direct. Our performance over the last few years has not met expectations, and that is on us. We lost the clarity and the discipline that make Target a place loved by busy families. The term busy families is going to come up quite a bit as well. So several times senior management referred to the fact that they took the eye off the ball, they stopped focusing on the things that mattered several times. And you can see this over and over again. If I go back up here, I thought it was I thought it was just right up here at the very beginning. This is what merchandising means. Talking about our team, we're excited to do the work. Now, we're going to dive right in. It's a new chapter. But yes, yeah, here it is. Here it is. So this is just within the 3rd line of the CEO opening today. He says, but let me be clear, that doesn't mean being dwelling on the past. Instead, we're moving forward with an urgency and a firm focus on Target's unique place in American retail. But almost all of them, the senior management, all refer to the fact that There has been a chapter, which is the point that you're making there, Donald. There's been a chapter in Target's history, which did not cover them in glory, which is also one of the reasons why you can see the PE ratio falling down to the level that it has been. So that was where I wanted to start off, and just that does mirror what the VectorVest indicators have been saying. I do want to focus though on their target market, because they refer, look how often they say this. They refer to busy families several times. Busy families. This is who they're targeting. And in my, I think it was the last international forum when I presented, that I was talking about Dollar General. And Dollar General is looking at a very different person, and also the digital strategy is very different, and the sales of the basket is very different, and the AI is very different. When you understand the different elements of retail, this does make sense. You can see here 10 times they bring up about busy families. That is who they are targeting. They didn't pick out a socioeconomic spectrum, because Dollar General does. What they're saying is it is the busy family. It's the family who wants convenience. They particularly are keen on pursuing an audience where you've got somebody who's pregnant or at the very early stages of bringing a child into the world, where they want to establish a long-term relationship with, again, that family as they grow. But they're also thinking of multiple people within the family household as well, as you'll see. Now, this is what they say they need to get the basics right. Let me show you what they say the basics are. Here we are. They say this means getting, delight is our standard. This means getting the basics right. Sharp pricing. So several times they talk about how they want to go after a very aggressive, They want to go after aggressive pricing. They want exceptional value for money, is what they say. Strong in stocks. They talk about how they were getting their inventory wrong, and that had massive ricocheted effects. First of all, on the customer, if they couldn't get what they wanted. But secondly, it also had an impact on the amount of money that was being held up in stock, or the cash flow management of it, as well as tariffs. They talk about that too. They say wicked fast same-day delivery. Like I say, they're now in a position where 2/3 of their digital sales are in service that fulfills within the day. And the other thing is where they go? Yeah, and they also, the emotional connection, so shopping isn't a chore, it's a joy. They have this strategy called Greet, Help, Thank. That's what they want to really engender into the way in which the business is now working. So if we move now into understanding what they're really all about, let me show you their merchandising authority is the first key thing, the first big bet that they're working on. And when you look at this from the Chief Merchandising Officer down here, I want to talk to you about Fun 101. So I'm going to search there for Fun 101. Now my screen has gone blue again, so what I'm going to do, oh, there we are. Okay. What I'm going to do is I'm just going to refresh. And when I search for Fun 101, I can tell you what it is anyway, because I have it noted here. Right, Fun 101. Yep, here we go. There we go. What they want to do, Fun 101, is how they really want to get into whole new sections of the business. So they are particularly focusing on a multi-year transformation, and that is multi-year transformation. Multi-year transformation from hard lines, which many retailers sell to get into a more immersive, trend-forward approach to sports, play, gadgets, and pop culture. And so that highlights, when you've got your busy families, it highlights different people within the household. That is who they're targeting. Now, they also talk about beauty, home, rather than me scrolling down again, I'll just note these out to you. Baby, home, F&B, which is food and beverage, and beauty. They're the areas that they really want to niche into. Again, I will highlight the fact that they're not talking about price point, apart from having exceptional value. But that's not saying that it's going to be at the lower level of socio-economic value. Now, remember, if they are going to be going up against Amazon, they need the value, they need the same day delivery. But how they can be different is Amazon has everything. That's the whole point of going to Amazon, is whatever I want, whatever color glasses I might want, or whatever cutlery I might want, or whatever obscure product I might want, Amazon would have it. They're priding themselves on doing something different. What they're looking for is newness. They say that particularly they want things that are curated, digital, a fast emerging own and wellness. That's the retail areas that they are looking for. So that's the first area that they're focusing in on is Fun 101, merchandising well, and let me show you about opening the number of stores, because this is a key element. This comes up a lot as well in the Q&A afterwards. So they say that emphasizing their stores are every bit as essential, whereas of course there's other retailers who you will hear from, and what they will be focusing on is having a vast amount of inventory and really dialing into digital. Now, let me show you here. Yeah. So they're making $2 billion incremental investment across the business this year. 1 billion is in capex to support new stores. So they're both opening new stores and they're what they're referring to as remodeling stores as well. And another $1 billion to elevate the guest experience. I'm going to delve into specifically what those refer to as well. Now, I want to show you what Target Plus is. Okay, Target Plus here. So Target Plus, yeah. So by fall, so by the autumn, they will have touched more than 3/4 of their top of bed assortment and more than 80% of kids' home. Again, that's referring back to the merchandising. At the same time, they're also accelerating assortment on their third-party marketplace, which is Target Plus. And they also have Threshold. So they're having a third-party marketplace, and they also are having Threshold. Let me show you what that is. Yep, their own brand. This is somewhere where they are again seeking to compete against the other retailers that are in the space. They're also looking at that as well. Now, we now need to move into technology because that's the second big bet that they're working on. Number one, like I say, number one is very much focusing on all things to do with merchandising. Number two is what they refer to as elevating the guest experience. So they talk about meeting people in discovery and social. And specifically, what they're aiming to do here is to meet people. There we are. They say their experience starts with discovery on social and in search. This is where scale allows us to lean in and invest at the top of the purchasing funnel so that then they can reach consumers in all ways that they're shopping today. Now, there's nothing new in that. Every retailer should be doing that. They're all talking about engaging people earlier on in the purchasing journey, meeting them on search, meeting them on social media. However, it's how they're seeking to connect them and turn those into the buyers is what's going to happen, is what they're focusing on next. And this is it, is that they want to have their investment in AI is to make that interaction, that touch point more conversational. Now, I've been doing earnings calls for years at this point, and what the aim has always been of retail when it has come to engaging and turning that passing traffic, that organic traffic into a customer, has been personalization. How, if I stumble upon any of their competitors and I stumble upon this, how do you personalize the interaction with me? Well, if you can make me log into my account, that's a huge bonus, because then you're going to have my history, you're going to have my previous support tickets, various different things like that. But now what they're hoping to do is, even outside of that, is what sort of data can you interact with that person upon, and using that type of data then to look at previous conversations. That's something that they're looking for. And let me just show you how much this matters, because loyalty, talking to you again about people who already have an app, let's just show you how much loyalty pays. Loyalty is worth a lot to them. Yeah, there we go. I want to go back to the number 3. I see the numbers. Yes, here we are. Members of their loyalty program, Target Circle, spend 3 times more on average, and those enrolled in Target Circle 360. And what that is it has unlimited same-day delivery, spend 7 times more. So that greet, help, thank, that ability to get people into the habit, the cultural habit of using their technology in order to book and pay for things and get them delivered within the same day, you can see the impact that is having. Now, they are the key things that they are focusing on within elevating the guest experience. So it is meeting them earlier in discovery and search, conversational AI, getting people to be part of the loyalty program, and particularly bringing people into Target 360. But what I also now want to do is I want to show you about the finances part, because this is where, when you look at the growth of the earnings, because that is what investors want. And as I'm looking at my time, I'm going to, yeah, okay. growth, actually, let me just go for adjusted earnings. That's where I wanted to go. This is going to be easier to get there. The thing about summarizing a 36-page document is that I have to hop around like this so that you don't have to. So let me get the earnings for you now. Okay, let me get the earnings for you now. Right, I'm going to just pop down past all of that. I'm going to go down to yeah, that's not the guest one from us. Yeah, they talk about the community side as well, which is very interesting, but I want to instead get you to, yes, that was it. Yeah, okay. As mentioned in our Q1 call back in May, last year's financial results included non-recurring tariff-related costs and inventory actions we took in the face of slower than expected sales. So I'm going to summarize what they're really saying here. Is they are, and first of all, sales did fall. And when I show you just how much of a real issue that they had here, let me just search for the word margin, because the margin that they were losing was just incredible. Let me go back up here to the point where I can show you. They're going back up here, 30 basis points. 30 basis points. That's why, as you can see here, all the analysts really were dialing into that. Now, let me search for it there for you again. We don't like to talk about that. Yeah, it's after bringing me back. Bring me back there. Okay. Now, let's try again. It's going to be easier if I go the other way. So that's 1, 2, yes, here we are. Last year's gross margin rate was down about 30 basis points from the prior year, which is a strong performance given the fact that we face significant pressure from incremental tariff costs. I cannot explain to you how much of an impact that is. 30 basis points is massive. That is 0.3%. That is a really significant amount. Like, if you think about that, for every dollar, let me just explain what margin is. For every dollar that I'm taking in sales, right? Let's say that margin is 20%. So now margin means that for every dollar that I sell, 20 cents of that is operating profit. If you have gross margin rate being down 30 basis points, that means every dollar that's coming in is being pummeled by a decrease in the amount of profit that is flowing then to the bottom line. So that's a huge issue. So what they went on to say is that despite the fact that sales were down, as a result of the changes that they've made since that they lost that margin, profit is actually slightly up. And that's why you've had a very positive reaction from the market. What they're now planning for is, if I get to the word mid, yep. What they're planning for is they're looking to deploy any excess cash apart from the $2 billion that they're looking at spending to share repurchase within the limits of their middle A credit rating. That is music, of course, to the ears of investors, because that means that then they will be dividing the amount of earnings that they have across fewer investors. And also the next thing is that then they also talk about their dividend as well. They're excited with their plans to open more than 30 new stores, as well as increase or remodel their existing stores, as well as refresh the inventory and things that they are selling, all of their SKUs. They're going to be changing and remodeling all of those as well. So they very much come across as that they're saying, look, they've learned the errors of their past, and what they're going to do now is really aim to fix an awful lot of that. Deal with the tariff-related income, deal with the inventory issues. You know what I was very struck by in this case, in utter comparison to our contrast to Dollar General, is look at this. Look how often they said inflation. They didn't. This is the point. I was constantly talking about the inflation, the inflated basket with Dollar General. They're not talking about that here. They're focusing on productivity. They're focusing on inventory. And I just also want to show you about the single digit sales, what they talk about here. Single digit sales. Okay. Now that I just want to show you, because this is where they're aiming to get to. Here we are. This is the key line, and I think this is why the market had the reaction that it did. And I'm now about to bring you over to the graph so we can analyze it from there before I hand you back to Rick. So even in the face of a challenging top line backdrop for the company, so that means in the environment where sales were not as high as they had wanted, our food and beverage sales continue to grow, led by mid to high single digit growth in both non-alcoholic beverages and candy. And what they're planning for is this is the longer term financial performance. They're planning for low single digit top line growth in 2026, which isn't all that exciting, but they're expecting to further accelerate that to the low and mid single digit range over time. The reason though, and now let me go back over here to the graph, the reason that you saw such a positive reaction to the earnings is because they've been able to manage to increase profit in an environment where sales had actually fallen. And it does sound like there's a real energy to this earnings call. There's a real energy and an urgency to this. And they constantly say that they're playing their own game. That's another thing, actually, before I go into the graph. Let me just show you that. They constantly say that they're going to play their own game. That's what they're saying here a lot. It's as if they've figured out, you'll see it here, they're playing their own game. Yeah. The answer to number one being about merchandising is that they say the answer to number one is when we play to our own game, we're confident the plans that we've laid out today's position for Target for sustainable growth. Our path to growth and share gains is unique to Target and is fully within our power to drive. So it's as if they've really internalized the strategy. There's an energy to the conversation that they're having. Now, let me now just analyze the graph here for you. I'm going to go back to the past month. So if I click here on the button on the bottom right hand corner, you'll see that. So this is what has happened. I'm just going to see how that appears on the screen to make sure everybody can see it. But like I say, the earnings were out over here on the 3rd. They were out on the 3rd of March. So as you can see here, the shares before that pretty much had traded pretty flat. But after that, then you did see the price jump from the price that it was on that day. Sorry, what did I say that it was on that day? What did I have back there? Anyway, I said it to you earlier. I think it was about $112 and it's now gone up to 120. You can see that it has jumped up despite the geopolitical uncertainty. Now, inflation is likely to be a conversation we're going to be having for foreseeably. When you look at the price of oil, we can see oil is now at $91 a barrel. That was the last time I had checked. It may have changed since I've been speaking to you here. The expectations within the investment analyst community is that it would be topping $100. It certainly is the feasibility if there's not any sign of any sort of a stopping to what's going on. Also, particularly, of course, the focus is on the Strait of Hormuz, and that's going to be what happens. The oil production in Iraq, the capability of doing that is significantly reduced. So that has led, particularly in Europe, like everybody's talking about it now, the price of home heating oil has jumped by 50% in the past week. The price of natural gas in the UK has doubled in the past week. The impact of this current development on the oil price has certainly what's the word I'm looking for? Not outperformed. I don't like using that term in this context. It has been bigger than the invasion of the Ukraine. It's been bigger than so many other different points. Now, when inflation is spoken about, it's often spoken about in terms of both food and energy. And we call core inflation when those two are stripped out, for example, or we can often talk about, energy and inflation without always really understanding the difference in between how they're calculated. Just remember, in this case, Target is relating to food and beverage for sure, but it's also various other different household elements, baby elements, beauty elements, etc. So the sheer impact of what inflation might do in this context is likely to be less so than we'll say a totally F&B or food and beverage play. Now, if interest rates though are, let's say that we have inflation, let's say as a result interest rates are increased, or let's say the central bank decides to go the other way and Kevin Marsh, when he comes in, at the moment scheduled for May, if there is instead a greater risk to the economy and they cut interest rates, that of course would have a knock-on effect on a stock like this because you're dealing with a consumer-led stock. So I just wanted to make that point there, to you. Okay, so we can see here that in this case, when we look down here, we can see that the earnings per share did jump, and they're up to 779 when they were 774 there before. We can see the PE ratio increased because, of course, then since people bought up the stock, that pushes up the price that people are willing to pay per dollar of earnings. We can see the comfort index actually declined, which tells its own story, and that is you're still dealing with a stock when its ability to withstand long-term severe and or lengthy long-term price declines. It hasn't shown its ability to do that yet. But what I do want to show you is the RT, because the RT is what is pushing up. Yeah, the RT is what's pushing up this stock's visibility within the VST. And so you can see there the RT went up to 1.5 in reaction to that. So in summary, and I'm going to stop sharing now and just look at the camera before I hand you back to Rick. In summary, first of all, I found this stock on the earnings viewer because it was one of the more well-known companies. It is a company that is looking like it is seeking to turn around from the challenges, and some of them were self-imposed, of its past. The market is not necessarily re-rating that with a real excitement yet. So there is an opportunity there for value investors, assuming that they can implement upon their strategy. If you look at their exposure to the key elements that we're seeing around the world, they're certainly exposed to inflation more broadly and the impact on affordability at home. And of course, then the follow on from that would be they are likely to be affected as well by any interest rate changes. And Rick earlier on showed you all of the dates that are arising from those. But it's not an oil stock, it's not a mining stock, it's not a gold stock, it's not relating to the commodities that Rick was taking you through there. The dividend is quite healthy well, I'm just going to check there what it is right now. It's at 3.78% now. As of the close, it was higher on Monday evening when I was analysing the stock there, but that's because that was before the earnings coming out, and that was, and obviously, if the share price goes up, well, then the dividend yield comes down. So at 3.78%, that's quite a healthy one. It is quite exposed geographically, to the US. It's not the only place it is, but it would be quite exposed to that. So you are being very much exposed to the American consumer. It is making its bets into AI like them all, but it's particularly doing so in terms of conversational AI. But what I will say is that if you are looking at the big digital retailers, the PE ratio is lower. 2/3 of its fulfillment is happening within the day. It is targeting towards busy families as distinct to everybody. So there is a re-rating opportunity there for the stock. From a VectorVest point of view, if you were solely looking at this from a fundamental point of view, it will take more to convince you that this is the case. Short-term investors they're buying it. You know, they're picking up on the stock for sure from an RT point of view. VST at the moment of the stock, I must check. I just want to check what it is as of the close. I just need to update my screen to get that for you. As I say, it was at 1.08. I just want to check exactly what it is right now. And okay, TGT. Rather than share my screen now, I'll just get it for you. Again, anybody who has the program, you can already come along, or you can follow me along. So it is the VST right now has gone up to 1.14. So it certainly is crawling up the ranks there. So if it continues to execute upon its strategy, bearing in mind a lot of volatility in the world, if you are looking for a consumer-driven brand that has a value proposition and looking from a value perspective, it's one that will likely creep up in terms of the VectorVest indicators, but the market at the moment, it's telling a different story depending on whether you're a short-term technical investor or whether you're a longer-term fundamental investor. Just before I hand you back there, I can see here that there is going to be, I just see that there's some, conversations there, particularly about Southern California in the chat. I just wanted to make sure that I had dealt with everybody before I hand you back to Rick. So Rick, right on time, I'm going to hand it back to you to take it home.
Thank you very much, Susan. So I'm going to share my screen out again. Maybe let me know when you can see that.
Sure, we can see it right now.
But thank you very much, Susan. Another excellent presentation. Of course, you never, ever let people down. And thank you for your kind words about Tampa, and also the folks that put kind words in the chat. Now, you know, if anybody has never done that kind of thing, I thought, you know, this is going to be pretty simple. I mean, I'm in VectorVest all the time, doing these things multiple times a day, but the pressure you feel wanting to ensure that you're doing the best job for the presenter to make sure their presentation goes smoothly is something that you don't quite count on. But either way, I'm not the hero. There's heroes behind the scenes, and we have one with us today. So we have, Clay with us today. I didn't mention that at the beginning, folks, but give a shout out to Clay for keeping us all in line here, keeping everything moving smoothly. And of course, Clay, Joey, and Paul were responsible to try to do the same thing for the event in Tampa, as well as all the other folks in VectorVest that you folks don't see, um, who are involved in ensuring that event gets planned. There's Melissa. Boston showed up there. This was the first time I was able to meet Susan personally, Boston as well, who, I've kind of dealt with from the times that I started with VectorVest as a subscriber. So, so many people, um, you know, making that event the success that it was. All right. Now, there was a question I just want to address here. There was a question about, what are the lines on my graph, the graphs that I show. When I'm actively trading anything, I'll end up putting lines on the graph to keep track of my critical levels, whether they be for entry, exit, taking profits, etc. And I did see too that when Susan was talking about Target, Don happened to mention that Target hadn't got through some resistance, from back a time ago. So I've got the target graph up, and I just want to show you, so if I was looking at Target, for example, and I'm not saying that I am, but let's say that I was interested in trading Target. You can see I put a horizontal line on here. Now I'm going to take that line and I'm going to change the width so we can see it better. And usually for me, a dashed line will be resistance. A dotted line will be support. Now you can see that Target is having trouble getting through this area here. So now if I'm going to take earnings off here. We can see their earnings are declining over the last year, but I'm going to take earnings off just so it's a little easier to show. And now I'm going to drag the timeline back, and I'm going to bet you that I'm going to come back to a point where this level that Target is struggling to get through has been significant in the past. And you can see, even if I stopped right in around here, let me just drag back a little bit further, but we can go back further in the past and see that. But if we just drag back right into this area here, we can see that this is 120.69 we're looking at. It provided support. Look at that gap down on an earnings call. It provided support right in that area. They did bounce from there. They did end up filling that gap. And then the stock price collapsed again here. And eventually you can see they came right back down to that absolute line. This is a zone before eventually gapping through. All right, so that was back in February, March timeframe of 2025. And now you can see why they're having some issues getting through that resistance now. So typically, if you see things that I'm actively trading, you will see that I do have horizontal lines on the graph, pointing out critical levels to me. Now, if I put support and resistance on, you can see the default settings of support and resistance don't put that resistance line on that I'm particularly interested in now, because that's where price action is right now. So that's why, typically when I'm trading, I use my own lines and identify my own areas of support and resistance, because they don't always match up with the default settings of the support resistance indicator. All right, and then the last thing before we close out, well, one of the last things, Susan did bring it up. She mentioned Lululemon, and I believe it was, folks, the first international forum that I hosted that Susan came on. She covered Lululemon earnings, and there was some joking banter back and forth, and she had been telling us that, oh well, Lululemon has men's fashion, and we were kind of joking about that. I can't remember if Joey was working behind the scenes on that one or not. I think it might have been Joey, but anyway, that sent me out on a mission, and then I went on that mission, and then I had to sit and wait. The trap was set for Susan, and I had to wait until she came on the next time. And so here you have my proof that I went to a Lululemon store, and look at what they had on the window, folks, when I went there. Literally what Susan was talking about. Men, we've got your pants. Now I can tell you, every time I see Lululemon or we talk about Lululemon, it uh, it just keeps reminding me of the late great Dr. David Paul, because anytime I was attending one of his webinars and Lululemon would come up, of course he would call it Lululemon, and he would quickly complain about, have you seen how much they charge for a pair of pants at Lululemon? So that's what goes through my mind. But anyway, you can see living proof that I went to a Lululemon. You can see, I'm not I'm not that eager to get too close to the store initially, but eventually, we do go up to the window, and we do end up going and checking out some of their apparel. Now, I can't confirm or deny this, folks. And Susan, I can't confirm or deny whether there would be pictures of me trying on any of the apparel at Lululemon, but I can tell you that there's not enough money on the planet to get me to produce any of those photos. Now, physical gold, that's a different story. So physical gold, Susan, or any of the folks out there, if you want to send me physical gold, maybe we can talk, but I'm not confirming or denying that those pictures exist. All right.
Noted indeed, Rick.
Noted. All right. So before we close out, folks, I want to remind everybody about the special presentation this past Friday. Was entitled "Protect Your Portfolio While Staying Invested." Very timely presentation. It was presented by none other than Mr. Ron Wheeler, Manager of Options Trading at VectorVest. So if you haven't had a chance to check that out, and sure you do, Ron covers a few strategies for protecting not just your overall portfolio, but individual stocks. And I think he does mention that there is going to be a running of the beginner options course in VectorVest coming up as well. I think the options jump starter. All right, so something to look out for if you are looking at options for the first time. Excellent course to get people started in options. All right, so there is that. Well, that brings us to the end. So we do want to thank everybody for coming and spending part of your weekend with us. It's been our pleasure to be here. We want to thank everybody for watching. And as usual, folks, if you do need any help at all, don't hesitate to reach out to product support and training. We've got the 1-888-658-7638 number in there. We've also got the local US number for those that need that. Some international numbers over there. We've got support email, support@vectorvest.com there as well. But once again, we'll thank all of you. We want to thank Clay once again for keeping us rolling here. I'll thank Susan for another great presentation. And yeah, that's it. A lot of things going on in this world, folks, geopolitically, et cetera, et cetera. Stay safe and healthy. Take care of one another out there, and have a great rest of your weekend. We'll catch you back in the markets